What do you suppose the bank does with your money while it's safely sitting in your checkings or savings account? Because here's the truth, the bank isn't holding on to your money, they're actually using it. And let me break it down. They essentially take your deposits, loan them out, invest them, and earn massive returns while paying you pennies in interest. So in today's video, I'll be breaking down how banks benefit off of the money you leave in the account and how you can flip the script and start doing the same thing that they do to achieve financial success. Now let's talk about how banks actually make money. Every time you deposit money into your account, the bank uses something called fractional reserve banking. That means that they only keep a small fraction of your deposit, sometimes as little as 10%, and lend the rest out to make profits. For example, if you deposit $1,000 into the bank might keep $100 and loan out the other $900, let's say at about 10% in interest. Now, if you multiply that by thousands of customers, they're lending, investing, earning credit card interest, mortgage interest, and fees, all with your money. Meanwhile, they're paying you 0.01% interest in a traditional savings account. So you're literally helping them make money while your dollars sit there losing value to inflation. Now let's talk about how they retain you as the customer into their system. Banks are very smart. They make it feel convenient. You get a debit card, a mobile app, overdraft protection. It all feels like service, but every feature has a fee or benefits them more than it benefits you. Your checkings account, for example, barely earns anything. Your savings account earns maybe about 0.1%, while inflation eats away at 3 to 4% every single year. And not to mention your credit card. They will charge you 20+% interest if you are late on any payments. And this doesn't necessarily make them the bad guys. They're just playing the money game better than most people. So how does the average person go about flipping the script? You essentially start being the bank. Here's how. Move your savings to a high yield savings account. These accounts pay anywhere from 4 to 5% interest right now. That's 400 times more than the traditional banks. Number 2, you need to invest your money instead of letting it sit. Use index funds, ETFs, or dividend paying stocks, assets that generate returns over time. Number 3, leveraging your credit smartly. Use 0% interest cards or business credit to invest in income-producing assets instead of consumer debt. And lastly, creating your own mini bank. Through strategies like infinite banking, using life insurance for example, or simply reinvesting profits, you let your money circulate within your own system instead of the banks. The truth of the matter is, banks don't let their money sit idle by, and you shouldn't either. While most people park their cash and hope it grows, the wealthy move their money. They lend, invest, and earn interest like a bank. So the next time you see your balance sitting still, remember, that money could be working harder somewhere else. Don't just be a customer in the banking system, be the system. Now, if you found this video helpful, go ahead and hit that subscribe button for me so you don't miss any of our smart topics.